Hello and good afternoon. Welcome to the live stream of Algo. I am Ben, also known as Brock Algo. We are here today to walk through some of the features available in Algo. I know I promised on YouTube a few people to walk through some of my trading strategies, one in particular, the $1,000 challenge. So I know some of you have been waiting for that, waiting to hear some of the rest of the rules in that strategy. So today we're going to walk through a little bit of the software itself, show you just how easy it is to build and backtest strategies with this. I mean, a little bit about me. My background is financial services. I am one of the co-founders of a technology company behind this software. So the reason for doing these types of streams and for giving this information out is really to give people an opportunity to understand the software, understand a little bit about financial markets and how you can really make the most of this software. It's a software that we're giving away for free. Within this world, the advancements of technology, things are becoming more readily available for users because human behaviors are changing. We think that algorithmic trading will become the norm. It's getting closer and closer. People can do so much more on their phones and tablets nowadays than they could do years ago. One tap of an app and your groceries are delivered to your front door. So the natural next step is that people should be able to take over their finances in a more controlling way. And that was the idea behind cryptocurrencies like Bitcoin. I mean, the idea was to give power back to the people and find a way that people can really take control of their own finances. So we see this as the next logical step, really. I mean, when you look at the industry as a whole, the idea of tokenization and the idea of assets becoming available and readily available to trade on a blockchain. I mean, it won't be long until if you want to go and buy a Google share, you won't be buying a share that settles into your bank. You'll be buying a token on the blockchain. So tokenization is really going to change the way that we look at finance, and it's really going to open the doors for things like algorithmic trading, because it means that the settlement times are going to be so much quicker for trading, that the availability of high frequency trading is going to be so much more apparent for the world. At the moment, if you buy a share through your investment provider, it will take 2 days to settle, whereas if it's coming through as an asset on a blockchain, it will take seconds. So really, we see this natural progression of the finance industry. So, this is why we're making algorithmic trading more available, more readily available for the world. Starting with cryptocurrencies, because of the availability of the market data, and setting ourselves up for when that tokenization comes in. So we'll be bringing in equities and other asset classes, as soon as they get tokenized as well. So we're here, we're ready for the future, and this is the software that we've built to help you do it. We make this software available for free. You can build strategies, backtest them as much as you want, and trade them for free. Trade them up to $500 a trade. If you're looking for larger trader volumes, then we will start to ask you to upgrade to premium plans. But the technology is there and free for anybody that wants to use it. So when you log into the screen, first thing you'll come across is a dashboard. And for the user journey, I guess for us is we would expect users to hold an account with the likes of a Coinbase or a Binance or whatever your preferred exchange is. At the moment, there's 3 exchanges we support, but that is Binance and KuCoin, Bybit, Coinbase. So if you open an account with us, you can link up your exchange account very easily. All you need to do is add in your key and your secret key, which you can get from your exchange. If you need help on doing that, I've got a couple of videos that I've released on YouTube showing you where to find them within the exchange. Once you've linked up your account, then you're set to go. You can start building strategies. Worth pointing out at the start here, if you're not confident building a strategy, or if you want to see what some other people have done, we've got some templates here of pre-built strategies. So The strategy that I walk through on my YouTube channel a lot is my $1,000 challenge. It is a strategy that we've built on Solana. As you can see here at the moment, it's up 81% year to date. I think the market overall is up about 70% at the moment since the beginning of the year, so we're slightly outperforming the market there. And that's the strategy that we're going to be walking through to start with. So if I come over to my scenarios, now I won't be able to edit it live because it is in that marketplace, so what I'm going to do is create a copy of it. And this is the strategy here. So I don't want users to be put off by the complexity of this. It's taken a long time to build, trial and error. You know, you'll see in the first few YouTube videos we did walk through each one, each rule step by step, and you know we'll give a recap of the rules that we talked about so far and what's through it. But the first thing that I want to show you really is kind of, you know, what I work from as a template. So you know, you don't need to do this as well. This is just something that I like to do. The idea of a trading scenario, you know, it should be easily explainable. If you can't explain the overall strategy of your trading scenario within a few simple sentences, then it's too complicated. You know, it should be simple enough that you should be able to explain it, you know, within a few minutes of talking. Otherwise, you can just get yourselves caught up in knots. So this strategy here, you know, we've got 4 buy conditions, we've got about 6 sell conditions. We are looking at Bollinger Bands, we're looking at moving averages, we're looking at volume. Those are the 3 main, and super trend. So those are the 4 main, I guess, rules that we've got, different combinations of those rules. And essentially it's a spot strategy that looks to catch corrections and breakouts in a rising market. So you won't see this operating in a falling market. That's why, you know, if you look at the trade history for it, we've only seen 11 signals in 75 days. That's because, you know, it only trades when the market's rising. It's a spot strategy. It's not one that's going to sell short when the market's falling. So we've got 4 buy conditions, we've got 6 sell conditions. So we've got essentially the first 4 sells are the opposite of the buys, and then we've got a couple of stop losses in there to make sure that we're not catching a falling knife, or you know, we're not losing out when the market's falling. So within the first video, we talked about these first few. Within the first video, we talked about the first few rules down here. Really, what we can see here is Bollinger Bands. Now these lag blocks, I mean, the idea, I'll take it back for a second just to start with. When you create a new scenario here, you've got four different types of blocks here, essentially. We've got what we call data watcher blocks, which are the blocks that will get data from the market. So within this block, I can specify which market, which pair we're looking at. You know, we've got probably about 30 different currency pairs in here at the moment: Bitcoin, Ethereum, Cardano, XRP, Solana, all the major cryptocurrencies in there at the moment. Now we're looking at bringing in other asset classes in the future, as we mentioned, but this is what we're starting off with in the first iteration of our software. The intervals, you can select which interview we're watching, whether we're minutely, hourly, daily. So the one good thing about this technology, which a lot of other softwares won't offer, is that it's multi-time frame. You know, you can mix up rules from hourly charts, 15-minute charts, daily charts. You can match different time frames within the same strategy, which a lot of software won't offer. And then the output, we're going to be feeding out. The idea is that the data will flow across the chart from left to right. So which data element do we want to output? Is it the closing price, high price, low price? As you look at a trading candle, you know, as you look at a trading candle, obviously on the green candles the price is rising, on the red candles the price is falling. The opening price is the start of the candle, so for a green candle it would be down here. Closing price would be the top of the candle, and the high and the low during this range would be where the price got to. So this is an hourly chart, so each candle here represents an hour of trading. So for this red candle, for example, at the start of the hour the price started here, and then it moved up to the top of this wick, and then it fell all the way down and then rised up again and closed out here. So where we're looking to feed these data values, high, close, low and open, and the volume as well, so we can feed out the volume or the on-balance volume as well too. The second type of blocks we've got in here are our indicator blocks. Now we've got over 100 indicators in here for those that are algorithmic traders. Those that write code know that these are quite difficult to program. We've already done the work for you. We've pre-programmed all of these indicators in. So if you want to look at the Bollinger Band, for example, all you need to do is feeding the closer price into the Bollinger Band block, and then it will work out what the lower, middle and upper band value would be on an hourly basis or a daily basis, or whatever time frame you're feeding into here. The third type of block we've got is our maths block. To create a new block, either I'm double clicking in the screen, or I'm pressing the plus button up here, or I can right click and click add node. A node and a block are the same thing. So our math blocks are the next one. Either we can compare the different values, we can compare the closing price to the band value, for example. We want to really use the math blocks to create rules and conditions to find out when, to work out when prices are moving, where we want them to be in relation to one another, or in relation to an indicator, or for two different indicators between each other. So I will use this one a lot, the condition block, and I can use this to specify whether something is more than, less than, equal to, the same as. So in this one, for example, this is a very simple rule that would simply check whether the price is higher than the middle band of the Bollinger Bands. And if it is, then I might look to sell. Now the last type of block is an action block. We've got two types of action blocks at the moment. It's a buy block and a sell block. We are bringing in a notification block very shortly, so you'll be able to, if you don't want to send the signal directly to your trading account, you can just have it send you an email or a text message. Notifications will be coming very soon. The sell block itself, or the buy block, you can name the block. So this is going to be my Bollinger Band sell. I want it to execute on my Binance account, for example, on the Bitcoin USDT pair is the one that we're watching here. And let's say I want to enter it as a market order rather than a limit order. Input is a percentage, so we will need to feed a value into here, which I tend to do with a clamp block. So with a clamp block, there's a couple of ways that you can feed values in. Either you can choose a fixed number, or you can choose a range of numbers. With this clamp block, would be usually what you use to set a range of numbers. However, in this, for example, I might just want to set 75. So if this condition is met, then we're going to feed 75 into the sell block. Now this last option of the sell block is labeled input as a percentage. So if I've got this set to true, then that's going to read this as 75%. So this is going to sell 75% of the value of the Bitcoin that I hold in my account when this condition is met at the end of the hourly chart. If I change that to false, it's just going to read this as sell 75 units of Bitcoin, which unfortunately is more than I hold in my account. So I'm going to change that back to true, and it will just sell 75% of the value of the account. So we've got 4 different block types here. We've got our data watches, we've got our indicators, we've got our maths conditions, and we've got our action blocks. If you look at the support screen, support pages within the block, there's a couple of options here. There's talk to us, which actually links directly to my Calendly profile if you want one-to-one sessions, or want to walk through any strategies, help with troubleshooting any issues that you're having, then you can use that to speak to me directly. And on the support pages themselves, we've got lots of video tutorials, we've got start guides, information about them, but we've also got down here a block library. So if you're ever unsure of what type of block, if you want to look and see if we've got a particular indicator that you like to use, or you can find these within the block library. This will list out all of the blocks that we have available. So that's in the support section. So that's a nice bit of background there. If I come back to my strategy, so if I come back to my strategy, I will run through the first few buy conditions again. I know I've done videos on these previously, but for those that are watching for the first time, we'll let them catch up. So we've got, as I said, 4 different buy conditions in there, 4 different buy blocks. If I look at a high level, we've got 4 buys and we've got 6 sells. So the first 4 buys, the first of the 4 buys, you can see in here, if you follow it back from the buy block itself, we've got 4 conditions under this buy block. Now the first of these conditions is here, and what we're essentially saying, this is an OR signal. So we're saying if any of these 5 elements are triggered, then we'll consider this to be true, and we'll meet the first condition of this buy. What we've got here is a number of lag blocks, and we're looking at the Bollinger Bands. So if I open some of these up, we've got the lower Bollinger Band here on the daily scale, the daily lower Bollinger Band, and we have got conditions comparing whether, in this case, the low price of Binance on the Sol Tether Binance daily chart is below the lower Bollinger Band. Now lag 5 means that we're looking at the time period 5 days ago. Lag 4 means that we're looking at 4 days ago. 3 is 3 days ago. So what this is essentially asking the question is, has the low price of Solana dipped below the lower Bollinger Band at any point over the last 5 days? And they're all feeding into this OR block. So if the price has dipped below the lower Bollinger Band at any point over the last 5 days, then we're going to trigger this, and that's going to be our first buy condition. For our second condition, again, we've got a comparison block. We are looking at the difference between the on-balance volume on the daily chart and we are checking whether it is above the value in this clamp block. And we've got the moving average here as well. So essentially we're saying that the percentage difference between the 1 day on balance volume and the 5 day moving average of that one balance volume is more than 1%. So just to visualize that on screen, on-balance volume is a volume-based indicator for every day of trading. If there's a green candle, then the volume is added onto the last value, and if it's a red candle, then it's taken away. So it's a way of tracking the volume in a positive or negative manner through the trading periods. Essentially, this is just asking if we have a positive difference between the on-balance volume now compared to the last 5 days. Are we above the moving average of OBV? And again, in our next rule, we see a similar that is D. So condition C within here, we're looking for, again, is the on-balance volume higher than the 10-day moving average of the on-balance volume? That's condition C. And for condition D, again, we're using the Bollinger Bands. So these blocks can have multiple outputs. It's a lot cleaner if you just use the separate blocks for each time you want to feed a value out. But sometimes it can be easier and quicker just to use this multiple times. And the last rule in here is, again, looking at the lower band and looking at the current daily price and looking whether the price is now less than the band. So we're looking for the price to have been above the band and then have dipped below it. And if all 4 of these conditions are met, then we're going to trigger our first buy. So there is a video that I've produced on YouTube that explains that in a little bit more detail. Second of the buy conditions, again, we've got a similar setup in here for the Bollinger Bands. Again, looking at the lower bands, looking at the lags. And what we're looking for is if the price over any of the last 6 days here is less than the 15-minute lower Bollinger Band over the last 6 days. Working down from the top again, we've got our 15-minute Binance. And what this is looking for here in this first condition is essentially there are 7 conditions in here. The first one we're looking for is that the price is more than the 400-part whole moving average. The whole moving average is a weighted moving average. So for those that have seen my video on YouTube looking at the different types of moving averages, whole is a weighted moving average that is more focused on the more recent data within the range. So it's a targeted weighted moving average. So by checking the prices above that, essentially we're seeing whether the trend is upwards. Because generally when the price is above its moving average, it's a sign that the price is on an uprise, and when it falls below, it's generally on the way back down. So our first rule there is prices above the HMA. Let's move these out of the way. Our second rule, we're taking a look at on-balance volume again. So this is a volume-based indicator. I mean, for those that have that may have seen another video that I made on YouTube, was really talking about different types of indicators and the best ways to combine indicators. So generally, I tend to find I get the most success when I combined each of the different types of indicators together. So a trend following indicator, a volatility indicator, a momentum-based indicator, and a volume-based indicator. So if you've got one from each category, generally we're looking at a good level of success. If you get 2 different indicators from the same category, then what you tend to find is that you get more than one. You get conflicting information. Essentially, you're giving yourself the same type of information back in different formats, which doesn't add a lot of value in a lot of cases. I tend to find. So here we've got our first condition was our trend indicator. We're looking whether the trend is positive. Second, we're looking at a volume-based indicator in here, and again it's similar to above. We're just checking it against the moving average. So on balance volume, for an on-balance volume calculation, we need the closing price and the volume data. So we're feeding in from our data watches 15-minute closing price and the 15-minute trading volume for Solana into the on-balance volume indicator, and then we're feeding from the on-balance volume indicator block into a moving average block, and then into a condition block. So we're checking here whether the OBV is higher than its 3-part moving average, and that is our second buy condition for this buy block. For our third condition, again we're going back to Bollinger Bands. Bollinger Bands, as we've seen, is a volatility based indicator. So what this does is measures standard deviations of the price. And you can see these blue bars above and below. Essentially, it will track a channel around the price data. And at times of high volatility, the bands will expand because the higher the volatility, obviously, the bigger the potential price jumps in a short period of time. So we've got bigger standard deviations of price, so the bands will move outwards. And at times of low volatility, as you can see here, when the price isn't moving very far, the candles aren't very big, that it will tend to bands will tend to contract again and expand at the high volatility. So in this case, we're looking at 15-minute bands. So in the last rules, we were looking at daily rules. So this is a shorter time frame in here. We're looking at 15-minute Bollinger Bands, and we're looking again at the lower band, and we're checking whether the price has fallen below the lower band. So we're looking for areas where the price is dipped below this band here. And that is our third rule. So for the fourth rule, again we're looking at this low price. And we're checking whether the low price is higher than the lower band. So we've got the closing price here. And the low price. So essentially here we're looking for areas where the low prices dip below and then the prices come back above. Is what these rules are looking for. For our fourth condition, again as we mentioned earlier, these lag blocks, so we're looking for an indication of the price has been below this band at any point over the last 5 blocks. So we're looking for an indication really that the price has been on the way down and that we've got signs of correction now. So this would have been an area that triggered it. We've had the price below the lower band We've had a low point below the lower band, and now we're starting to rise back up because it's closed now above the band. Is essentially what these are, and as we talked about before, we've got this is demonstrated through the lag blocks, so we are comparing the lower Bollinger Band and the 15-minute price, low price, one period ago, 2 periods ago, 3 periods ago, and we're feeding each of these prices and band values into a comparison block. And we've got another condition block here with an OR symbol, so if any of these 6 are triggered, then we'll consider this true and we'll feed out this value. So condition F of this block similar to the first one. The first one we looked at was HMA, whole moving average, 400 parts. Again, this is a very similar rule in that we are looking for simply a shorter time frame here. We're looking for the 15-minute price to have closed above the 100 part HMA. The way that these strategies were designed, it was a lot of trial and error. You know, a few weeks of trying different things here and there. So that's probably a duplication of a little bit of the one above. Arguably, we could take one of them out to simplify this down. It's just a result of how this strategy was built through trial and error that we've ended up with this setup. And then for the last price, the last condition, we're looking at the relative strength index. So we've got our volume indicator, we've got our volatility indicator, we've got our momentum indicator here. Now we're looking at the relative strength index on the daily chart. Now I know the rest of the rules in this are 15 minutes. This is a daily RSI that we're looking at. But we've got it set to 75, so we want to make sure that the RSI is below the 75. Now 75 is a very high level for an RSI. As we know, RSI bounces between 0 and 100, looking at whether assets are generally oversold or overbought by looking at the buying data and selling data. So RSI generally, you know, you'd see it dip below kind of 30, 40 would be considered an oversold areas, where a lot of swing traders would look to buy. Over kind of 60, 70 would be oversold, as where swing traders may look to sell. But again, this is a 15-minute. This is a set of 15-minute rules, and we're looking at the daily RSI. So although that 75 is quite high, you know, what we're really looking to do here is filter out some potentially false signals. So it doesn't necessarily matter that that's so high. What we're looking to do is cut out some of the signals that are potentially being generated in really oversold areas, overbought areas. So a condition block looking at whether that closing price feeding into the RSI is below 75. So for our third condition, we're looking at something slightly different. We're looking at the super trend indicator primarily. Super trend indicator, for those that haven't seen my video, is it's a trend-based indicator. And what it will do is plot a line above and below the price line. So when the price is trading above the super trend line, we'll see this kind of red signal, and it will indicate sell. And when it's trading below, so when the price is trading below the super trend line, we'll see this red line at the top, and it will trend sell. And when it's trading above, it will show that there is momentum in the trend, and the super trend will sell, signal buy. And we'll see this green line, and it will move above and below. So it's a nice visual way of looking at the price in relation to in relation to the average true range and in relation to its trends. I do have a video on that as well, which I have released. So go and check that out. The YouTube videos are well edited as well, so you won't have to listen to me mumbling like this. So our first condition in here, we've got a 15-minute on balance volume. Let's start off actually with the Bollinger Bands. So the first one in here, again, we're looking at Bollinger Bands on a daily basis. And we're checking whether the low price is above the middle Bollinger Band. So what we're seeing there, if the price is above the middle Bollinger Band, essentially is looking that the price is in a general uptrend. And what you'll find that this strategy tends to do is wait for the price to be in an uptrend, and then it will trade between this channel, between the middle Bollinger Band and the upper Bollinger Band. So this is looking for the low price on the daily chart to be above the middle band. As we said, this is a spot strategy that trades in bullish conditions. So generally we're looking for that rising market condition. We're not going to be selling short in a downtrend. Our second condition, again, we're looking at RSI. So we've got the warped moving average of the RSI, 14 parts, and we're checking whether the closing price is higher than the warped moving average, the weighted moving average. Yeah. And what this is generally showing us is again, a lot of people use RSI as a momentum indicator. They'll use it for short-term trading when it gets above and below certain thresholds. However, another way to use it is if you take a slightly longer view of the RSI. What you'll generally find is on the uptrends, RSI will be generally above 50, and on the downtrends it will be generally below 50. So what we're seeing here is a weighted moving average, and we're looking at whether the RSI is above its moving average. Which I can show you visually here by adding in the moving average on the RSI down here. So we're looking for the RSI to be above its moving average, which, as you can see here, generally indicates that the price is in an uptrend. So that's our second condition. We've got 1 and 2 for this buy block. So then we get into our super trend indicator, and we're looking at a 4-hour chart here. So we've got the 4-hour high price and the 4-hour closing price being fed in, as well as you'll find the low price and the source. So this is just the way that the super trend indicator is calculated. We need to feed in high, low, close, and a source. The source I will generally use the closing price, but it's part of the calculation as to which one you want to kind of trigger the calculation. As we mentioned here, within this super trend, if it's trending buy, if the price is on the rise, then it will trend buy. If it's on the way down, it will generally trend sell. So we're looking for the super trend indicator block to be trending buy, quite simply, on the 4-hour chart. For condition number 3. So for condition number 4, we're looking back to the 15-minute charts. We're looking at a low and a closing price. And we're checking whether the low price is above the 200-part moving average of the closing price. So again, this is another way of checking generally the trend is in a bullish condition. We've got a simple moving average. And as it's 200 parts, it's a long-term moving average. So we're going to see a long, smooth line. And we're checking whether the low price is above that moving average. Part E, we're looking at the average directional index. And we're simply checking on a 15-minute chart here whether the ADX is above its exponential moving average. So we've got our volatility indicators, we've got our momentum indicators, we've got our trend indicators, and following on our rule, we're mixing in now some volume-based indicators. So we've got on-balance volume down at the bottom of this set of rules. Two different views here, as we mentioned before. We can mix different time frames in this. So we're looking at the 15-minute on-balance volume and the 8-hour on-balance volume. So we're feeding in the closing price and the volume into each of these OBV blocks, and we're checking whether the on-balance volume is above its moving average in the first instance on the 8-hour chart, and whether the short moving average is higher than the long moving average on the 15-minute chart. So this shows us that there's volume flowing back into the asset for each of these, and that there's generally people are buying, people are pumping volume into the asset. So these are all of our buy conditions, and the last one we skipped over there. This is the first time that we talked about super trend. Those that have seen the first couple of videos on my YouTube channel would have seen me break these first three sets of rules down in detail. That's the first time we've really talked about super trend within this strategy. So another first, some of the sell signals that we've got here. Now what you'll essentially see with the first few signals is that a lot of these are essentially the opposite of these buy conditions. So we're looking for a particular set of rules in these buys. We're looking for conditions to be in our favor. We're looking for we're looking for the trends to be showing an upward rising trend. We're looking for momentum to be indicating favorable buying conditions. We're looking for volatility to be showing us that we're at the lower end of what we think the volatility would be. And we're looking for conditions where essentially we think that the price is going to be correcting back to an upward trend, and it's within these. So what we'll see generally in these sell conditions is the opposite, really. We're looking at the price has had that correction, and now it's topping out, and potentially trends are about to reverse, and it's about to correct back down again, but still under rising conditions generally. So the first of our sell conditions, again, we are looking at Bollinger Bands, and as we can see here, we're looking at lag blocks. So we're looking at a range of trading candles, and we're looking for evidence that the price has tipped above the edge of the top of band. So generally we're looking for this this kind of area. So as we can see here, lag 5 is the candle 5 periods ago, the candle 4 periods ago, the candle 3 periods ago, and we're looking at a daily chart here. So the first set of rules within this was daily, so we're looking at the opposite of that. We're looking at, on the daily chart, whether the high price of any candle over the last 5 days has tipped above that upper band. And again, we've got a condition block here with an OR symbol. So we're saying if any of the last 5 candles have dipped above that upper band, then we'll trigger our first condition. The second condition of the first sell block, we're looking at the daily price is now less than the upper Bollinger Band. So what we're essentially looking for is that we've got evidence that one of the last 5 candles has been above the upper band, and now having had a candle high above, we're now closed back down below. So we're making sure that we're not missing out on more gains, because we've seen rising prices, but now the prices dip back below the upper band again, so we think that that might be a signal of the reversal of the trend. So we've got the closing price on the daily value is now dipped below that upper band for our second sell condition. For C and D, we're looking at on-balance volume again. So we've not got as many conditions in the sell rules as we had in the buy rules. Because by virtue of the fact that we are already in a long position, we know that we're in a rising market, or we wouldn't have bought in the first place generally. And we don't want to be caught in a downward trend, so we're happy to accept less sell signals, I think, than buy signals needed. And within our on-balance volume rules here, we are looking at the difference between the 1-day OBV and its 5-part moving average. So similarly that we had in the buy conditions, we're looking at the daily OBV, we're looking at its 5-part moving average, and we're checking the difference between them, and we want that difference to be more than 1% again. So we can see that there's a change in momentum from a volume perspective. And then for part D, again we're looking at OBV, but we're looking at its 10-part moving average and checking simply whether it is below. So again, we're seeing volume coming off the asset, and we're seeing a falling trend in volume. Which would be a signal that the price is now starting to come back down again. So those are the daily rules. For shorter rules, again, we've got an hourly Bollinger Band set of rules here. So again, opposite to the Bollinger Band rules, hourly shorter term rules we had there. Again, we're looking at the upper band and the high price, and similar to above, we want to see that the high price in each of the last 5 days has been above the upper band, and then the current price has now dipped back below it. So the same concept as before. We want to see that the high price has been above the upper band, and now that it's dipped back below it, the only difference here is that we're looking at an hourly chart rather than a daily chart. For our third condition, again we're looking at volume. So we're feeding in hourly closing price and hourly volume into our on-balance volume indicator. And we're checking whether the 30-part moving average of OBV is now higher than the 10-part. So we've got this moving averages of OBV from a short and longer period, and we're checking whether they're crossing over. So in the first instance they were crossing above because the smaller was above the larger, and now the smaller has dipped below the larger. We're seeing a change in the OBV. For our fourth condition, we're going back to the Bollinger Bands, and quite simply here we're checking whether the low price is below the middle band. So on the hourly chart we've seen that not only has the price been above, we're checking whether the low price now has dipped below the middle band. So this would be an example here. And the very last rule, we're looking at OBV again, and we've got a maxing period block here. So let's move some of these out of the way. This maximum period will look at the OBV for the last 50 periods, because we're feeding in the OBV value into here. The hourly OBV, so over the last 50 hours of on-balance volume, the maximum value that the on-balance volume was is being fed out into the difference block, as well as the current OBV at the end of this trading candle. So essentially we're looking for the difference between the current on-balance volume and the maximum point that it was over the last 50 periods here. And using this condition block here, we're comparing that difference to the value in this clamp, which is set at 20. So we are asking is the difference between the current on-balance volume and the maximum that it was over the last 50 candles more than 20%? So that's our second of the 6 sell conditions, or 6 sell blocks. The last 2 blocks are just stop losses, so they'll be easy to walk through. For the third one here, we're looking more at the super trend. So this is going to be the opposite, essentially, of these super trend buy rules. So for this one, we've got, again, 6 conditions here. And our first one, quite simply, is looking at the 1 hour super trend signal. As we talked before, super trend, we've got the line above and below when it's signaling a buy or a sell. And we're looking quite simply as the hourly super trend is signaling a sell for our first condition. For our second condition, we are looking at the last signal profit. So this is looking at an hourly band. So at the end of each hour, it will look at the profit since the last signal we generated. And we're checking whether that's more than 1%. So this is really a sell condition that's designed to help us take profits in a rising market. So we don't want it to sell in conditions where we're in a loss, because that's not the point of this sell block. We've got stop losses in place if we want rules to fire the next time that the price dips and we're at risk of losing money. Then we've got stop losses in place for that. We only want this sell block to trigger if we've got bullish conditions and we're using it as a take profit. So we've got a rule in there to make sure that we've got more than 1% profit on any gain before we will trigger this sell order. And that's what our second condition is doing in this sell block. For our third one, we've got down here. I could probably do with cleaning this up a little bit, but here we go. So we are looking at Bollinger Bands again, and we're looking at the middle band of the 800 part. Now 800 is quite a large value. We're looking at essentially the long parameters on these bands and what that will give us. As you can see here, I'm going to stick in two, and I'm going to have one very short and one very long. And we'll make them different colours. And what you should see there is that the longer the period that we're looking at, the higher the band will be, because we're looking at the average volatility over a much longer period. So the shorter the Bollinger Bands, you can see they're much closer to the price, so it's going to be more difficult to trigger these. So we're looking at quite a long period here, and again, similar. The reason for that is that we want this signal to be generated in bullish conditions. This is a sell signal that's going to take profits for us. We don't want to be triggering it if in conditions where it potentially might be losing money. So we've got quite a large Bollinger Band range set on this, and again we're looking at the closing price, checking whether that is above the middle band. Because again, you'll only see the price above that middle band of the larger Bollinger Band range in a rising conditions. You won't see it in falling conditions. So although Bollinger Bands are generally a volatility based indicator, we're kind of using it as a trend based indicator in this instance to make sure that we've got those bullish conditions. Okay, so rule number D, we're looking at OBV again. You'll see a recurring theme here. Again, we've got our volatility indicator, we've got our trend indicator, we've got our volume indicator. I tend to pick one from each category and make sure that we're mixing these, in a way that's going to provide us value. We're not duplicating information too much. It looks very complicated, but there is a method to the madness. And again here, for our on-balance volume, this time on an hourly chart, we're quite simply checking whether it's below the moving average. So again, we're seeing volume coming off for the market. But the OBV, remember that if there's a down price, then the value comes off the OBV value, and if it's an up candle, then the value gets added back on. So below the moving average means that generally we're in a falling conditions. So within this overall sell strategy, again, we're in rising conditions. We've seen price potentially topping out, starting to correct back down again. Those are the kind of conditions that we're looking for. For E, the fifth condition of this particular sell block, 1 hour price is less than the 1 hour HMA 450 we've got. So hourly closing price being fed into the whole moving average. We're looking at a long-term whole moving average here. So again, this is a trend-based momentum, and we're checking whether the price is now dipped below that 450 HMA on the hourly chart. So that's our third set of conditions. I know we've missed one. Part F, again, is another unbalanced volume rule. So again, we're looking at this max in 50 periods up here, and we're checking whether the unbalanced volume on the hourly chart this time, again, the difference between the current OBV and the maximum that the OBV has been in the last 50 periods, the difference between those two is more than 10%. So again, it's the opposite of the difference rule we had for OBV before. So we're looking for a 10% drop in that OBV essentially, and that's the fifth one. So within our sell block here, this is a much simpler block set of conditions. We are looking for 5 conditions here. Part E I will skip over because that's one we've already talked about that you can see before. That is a duplicate of one of the rules we had above, looking at whole moving average. So again, as before, essentially we're looking for a signal that the price is starting to trend back down. We're in an uptrend, but the price has just dipped below its whole moving average. The whole moving average, remember, is a weighted moving average focusing on the more recent data. So we're seeing that the price is just starting to dip below that HMA. Is essentially what that rule is saying. HMA generally is because of the weighted average is more focused on the more recent data. It's a very reactive signal compared to a simple or exponential moving average. So if you're looking for quick signals that price is moving in different trending in different directions, then HMA generally is better for shorter term strategies, whereas people might use the simple or even the exponential for slightly longer term strategies. And as we can see here, these rules are based on 15-minute charts, 15-minute time frames. So we've got a rule in here around last signal profit again. So every 15 minutes, the closing price will feed out into the last signal profit, and we'll check whether that profit is less than the 14-part moving average. So essentially we're looking at the average profit. If it dips below its moving average, then generally we're in profit. Suddenly the profit starts to drop, and then we're getting out, because again we see that as a signal as if the profit's falling, that could be a signal that the price is falling, that the trend's reversing. This is a take profit rule. And again here with this one, part B, very similar, except this one is looking at the difference. So we're looking every 15 minutes, we're checking the difference percentage value of the last profit, or the profit that our last signal, since our last signal. And we're checking that over 0.5%. So again, you know, we've generated a buy signal. We're in the trade's in profit. If it's suddenly within a 15-minute period, the amount of profit that our trade's in dips below 0.5% difference from the last 15-minute candle, then we're going to take the profit out, because that's where it looks as though the amount of profit that we're in is starting to dip down. Essentially, is what this rule is saying. Now I can go through that in more detail if people would like. You know, if people are interested in hearing more about that, then by all means, you know, use the Talk to Us feature, book in the one-to-one. I can talk you through it in more detail. I know I'm rushing through these rules very quickly. Again, just giving a bit of an overview, kind of some of our thought process with some of these strategies. So those are our first two rules in this particular set of sell conditions. Thirdly, again, we are looking at whole moving average. So again, another trend indicator. Again, following the theme, you know, we love trends. We love making sure that we are following trends, that we're following volume, and that we're following volatility. We're taking one from each category generally. And this is quite simply looking at whether the 15-minute price has fallen below the whole moving average for 200 parts. So 200 15-minute candles. It's about a day. And the last one here, again, we're looking at volume. We had a trend indicator, we had a volatility indicator, now we've got a volume indicator. And again, we're looking at the percentage difference. Instead of the max in 20, we're looking at the min in 20. So the minimum that the unbalanced volume has been over the last 20 15-minute candles, we're looking at the percentage difference between the current OBV and the minimum that it's been in the last 20 candles. And we're looking at whether that percentage difference is less than 5%. So we've seen essentially a 5% drop. And that's our last sell condition there. Finally, we've got our stop losses. We've got some very simple ones here. You know, we've got the capability within this software to build some very complex stop losses. You know, if you like tracking ATRs above and below sell prices, or you know, there's lots of things that you can do with this software. I mean, you can see here, your limit is your imagination, really. There's so much that you can do here. But these are just very simple stop losses. So we're looking at a 15-minute chart and a 10 and a three rules simply for this one. The first one is the rule above that we looked at around hourly price being less than the middle Bollinger Band. I've moved that one up there, but you can see hourly price less than the middle Bollinger Band, and we've got hourly price here being more than the middle. So essentially they're the same thing. So there's a bit of duplication in that. So as I say, I mean, this is just a result of the way that we've built this strategy through trial and error. Again, we've ended up with a bit more duplication in there, so we could clean this up a bit for sure. And we've got the price dipping below the middle Bollinger Band as our first rule. And our second rule, again, we're looking at last signal profit. So at the end of each 15-minute candle, we're feeding the closing price in here. We're checking what the percentage of profit was since our last buy signal. And in each 15-minute period, if it's dropped 1.8% or more, then we're going to sell. So two rules really there. The price has dropped below the middle Bollinger Band. Price has dropped below the middle Bollinger Band, and there's been, since the last buy signal, we're showing we're in a 1.8% loss in 15 minutes. Those two conditions are hit, but then we're going to sell, we're going to trigger that stop loss. And this stop loss here, the last one, is really for our doomsday scenario. We're looking at a 15-minute chart, again looking at the last signal profit, and we're asking if the price has dropped more than 10% in any 15-minute period, then we're going to get the hell out and sell there. So those are all of our conditions under the Brock Algo $1,000 trading challenge. The challenge itself, again, we started at the beginning of the year. For those that have been following my YouTube channel, you'll be able to see we started off on the 5th of January. We bought in almost immediately at a price of $98. We had a stop loss triggered quite early on the 7th of January, and we lost $10 per coin on that first trade. So we were 10% down from the start, which had me a little nervous because I just made a YouTube video talking about how I was going to give updates on this all the way along, and suddenly we were 10% down. Luckily we bounced back, we bought back in at 88 after the correction, and then we rode it all the way up to 99 before we sold again on the 9th of January. So we made a 12% gain there. And then we sold out just before the dip, and we bought back in again down here around about the 10th. And again, we've seen some ups and downs since then. In a short period, we bought down here, we bought back up here for a 5% gain. And then we didn't see any conditions that were favourable for a while. Until here on the 30th of January, 29th of January, we bought back in. We bought back in at a price of 97, rode it up to 100, and sold again for a 2% gain. And then we bought back in again. And those that have been following the price of Solana will know we then rode it all the way up. To pretty much where it's sitting today. We sold at 170 for a 71% gain. That was a lovely gain at 173 before we triggered a sell order. Now, I don't know about anybody else that's using this strategy, but I was a little nervous when we sold out at 71 and then the price rode all the way up to 200. But it's now come back down again, and we've now triggered another buy, so faith has been restored. So we've actually bought back in again at not far off where we sold, and we've not picked up any losses along the way. So we're looking pretty good year to date. We're up 81%. The market overall, if we started around about 98, market's sitting at around about 172 today. So the market's up about 72%, and we're up about 84% overall, I think. So there it is. That's the $1,000 challenge at the moment as it stands. I know I've run through a lot of information there, so I'll take a little pause. If anybody's got any questions they want to fire through, then fire through. Otherwise, we'll get straight into building a new scenario. For those that are still interested in that $1,000 challenge, it is available for free if you sign up to the Arrow software. It will continue to be free for a limited period of time. Probably the next four weeks or so, I think. So our new scenario. I'm going to set it up. I'm going to give it a name. This is the default template. This comes up anytime you open a new scenario. Just to give a little idea of what the kind of things you can do. It sets up with a super trend and an RSI. So there's two real ways that I tend to go about making a new strategy. As I said before, it's really important that you have a simple way of explaining your strategy. It shouldn't be overly complicated. It should be simple enough that you can explain it in a few sentences. So, like we had here for the $1,000 challenge, you know, I've got a few simple rules that I've built in place there. So one way is that you can build a new strategy is you can come up with a list of 4 or 5 simple rules that you can implement, whether it's based on volatility, trend, momentum. You know, come up with 3 or 4 different rules and come up with a short list like this that you can build, or you could start from the scratch and you can just trial and error all the way through. So we can start out with a really simple concept. So I mean, this is a key concept in algorithmic trading. It's called optimization. So you'll do something, essentially trial and error. You'll try something, you'll build a simple rule, and then you'll add rules as you go. You'll add another rule, see how that affects it. Has that made it worse? Has it made it better? You know, have we filtered out some noise? Have we done too much? Have we filtered out too many signals? And that was essentially the way that we started with this Brock Algo challenge strategy. We started with some very simple rules, and we added to it as we went, until we got to the stage that it's at now. So let's make a new strategy on, again, I mean, the reason that we chose Solana in the last strategy was, you know, generally we wanted something that was going to follow Bitcoin, but with Solana, because the price is a lot smaller relative to Bitcoin, it's, you know, $100 versus $60,000. So, you know, a 2 or 3% swing in Bitcoin can mean a 5 to 10% swing in Solana. So we wanted something that was closely tracking Bitcoin really, but generally had slightly more volatility, so you can catch some slightly bigger upswings and some slightly bigger corrections that you can take advantage of as well there. So a couple of the smaller coins are fantastic for that. You know, the likes of Cardano, XRP, get some really big swings up and down. Or if you just like Bitcoin, you want to trade Bitcoin, we've got BTC up and BTC down on the Binance chart, which is a leveraged coin, although they do charge for holding that coin, so I'd be careful about holding long-term positions with that. Again, none of this is financial advice. You know, this is for information, educational purposes only. So why don't we make a new strategy? Let's go with Cardano. And why don't we start off with a bit of MACD? Something we haven't used in the $1,000 trailing challenge strategy. So MACD, for those that I'm sure are aware, or those that would have seen my video on MACD, is moving average convergence divergence. So essentially this is an indicator that tracks the differences between moving averages. You have a signal line, you have a moving average line and a signal line essentially. So you've got the differences here. And as you can see here, as the MACD line crosses over this signal line, it's generally what a lot of people you will use for entry and exit signals. So you can see a crossover here, generally at the bottom of the trend, and another crossover up here at the top of the trend. So a lot of people like to use this as a bit of an indicator. Now that's not to say that on its own it would be good enough. Again, you know, this is a kind of strategy that you need to trade in bullish conditions. You need to make sure that you're not going to catch falling knives on the way down, because as you can see here, if you'd have just sold when the lines cross back over, or if you'd have just bought when the lines cross back over, you could have been falling all the way down here and not bought back again until there, so you'd have been sitting on a heavy loss there. So you need to combine it with other indicators, but just as a way of kicking off, let's look at the ADA MACD and have a look at it crossing over. So when the MACD is more than the signal line, if I was just going to run on MACD alone, again, there's over 100 indicators to choose from, all programmed in here. And in its very simplest form, this would be a strategy in its own right. It wouldn't be a very successful strategy because, again, we're going to be catching the price on the rise as well as on the fall. But if I was to save this now and run a back test, you'd probably see quite a lot of signals generated on this. Backtesting is, again, very easy. All I had to do was save the scenario, go into the backtests, click on new backtest, select my start date and my end date and my starting balances, and hit run. Just set the right asset, because we're looking at Cardano, not Bitcoin. As we say, this is a software at the moment that predominantly is used to trade cryptocurrencies. More currencies will become, more asset classes will be coming in soon, very soon. Looking at foreign exchange, I know a lot of people love algorithmic trading on foreign exchange pairs. equities, will be made available as soon as we get some tokenization. So this is already completed now. We've just tested 2 months worth of that MACD strategy. It's taken 17 seconds. As we said, wasn't particularly successful. We've only got a winning probability of 33% in there. We've generated 162 trades in the space of 2 months, or nearly 3 months worth of testing. And as you can see there, these are all the signals that would have been generated in that time. So we tested this from beginning of the year up until yesterday. Cardano price over this period is only up 3%, but our strategy is down 14%. So there's a lot of noise in here. I mean, 162 trades over 2 months. I mean, that's 50 trades a month. That's a lot. That's more than 2 trades a day. But you can see within here, although there are lots and lots of signals, you've got some very nice signals in here. You've got some buys and sells either side of breakouts and corrections. So there are some nice signals in here. Now the first thing that we'd need to do is put in a filter, make sure that we're only buying and selling in the right conditions. So this is what we mean about optimizing your strategy. As you go through, you can check what's working, what's not working, and we can start to add in more rules and conditions to make sure that we're trading under the right conditions, that we're combining different indicators. So the first thing that I might do in here is add in our first condition block now. I might want to only buy when the MACD crosses the signal line, plus I've got another condition block now that I've added in there for a second condition. So let's see if we can make sure that we're only buying under bullish conditions by adding in a trend indicator. Now again, we could have, the HMA, we're looking at, let's say 100 periods. We're looking at an hourly chart here. I could feed the hourly price from the same data block, or I can get a new one out and feed it from there. And again, we want to have a look at the conditions. We want to make sure that the price is above its moving average, so we're in an uptrend. And if I just add that in there, we've now got 2 conditions for our buy block and still keeping the 1 for our sell block. Let's save that, go back to our back test, and I can create a new test, or I can click on here and click repeat to run the same test under the same conditions. And in real time, you can see again that's only taken less than 20 seconds to run that test. And already we're starting to beat the market. We've got still a low winning probability. We're only at 38%, but we've returned 3.78% when the market was up 3.27%. So just with 2 simple rules there, we can beat the market. We've filtered out some of the noise. We've filtered out some of the signals that were generated in unfavorable conditions. We've gone from 160 trades down to 117 in that period. And again, you can see here we filtered out some of the bad signals, so we're sitting at a higher profit now than we were before, and we've actually beaten the market. Now, given that there's been so much volatility in the market over the last couple of weeks and months, Bitcoin's sitting at, rose up to all-time highs now. I know it's had a correction back down again, but it's generally been very far up and then come back down again. Now I know Cardano's had a lot of news recently. They've They've recently launched their own stablecoin, so there's been lots of bullish news coming out for Cardano. I'm surprised that it's only up 3.27%, but having said that, we're only at the very start of the bull run. It's it's something to watch over the next few months. As all the currencies will be. The halving coming up for Bitcoin. There's going to be a lot of favourable things coming along very shortly for all the currencies. So this is a great time to get an automated strategy in place with the halving upcoming to take advantage of these great things that are going to be happening. So there you have it. I mean, in just two sets of rules. Now this is the part of the process where I would be again continuing down this journey. I'd be adding in more rules, more conditions, more buy conditions, more sell conditions, building this as you go. This is a process that we call optimization. Every single time that you change a parameter within here, whether I change this HMA to, instead of looking at 100 periods, I might look at 50 periods. I might have a rule that checks RSI, and I might check whether it's above 50 or below 70, or above 30 or below 30, above 30. Every parameter that you change in every single indicator will have a big impact on the output of the results. So there really is a lot of trial and error. It's something that we're working on within the software. We're going to be bringing in some automation for optimization, which means that essentially you can run one back test and it will run hundreds in the background and tell you what the best parameters would be. That's a really exciting feature that we're working on. Can't wait to be able to bring that out. But essentially, at the moment, this, and you can see, particularly with our $1,000 challenge strategy, this does take some trial and error, and this has took a lot of trial and error. But as you can see, that the results are worth it, because again, we've got a strategy that's up 84% year to date. These kind of gains. These are the kind of gains that hedge funds are going to be looking for. It's a very powerful piece of technology, and again, this is a piece of technology that we want to put in the hands of everyday consumers. We want to bring this technology to the world, really. The moving trends across the world of availability of technology, the changing of consumer behaviours. There's no reason why we shouldn't be able to bring this to the masses. It's absolutely free to run this technology. You can build, backtest as much as you want for free. You can run strategies for free up till a limit of $500 an order, and only above that would we ask people to upgrade to a paid version. So this is essentially we're letting users build strategies for free and backtest for free, which you won't find on any other software. So we're putting the power back into the hands of the people. Again, I've been talking for a long while now, so I am going to draw this to a close. As I say, if you have questions, then reach out to us. Use the Talk to Us feature within the app. It will take you to my Calendly page. You can book in a one-to-one session with me if you want to talk strategies, if you want to talk indicators, if you need help building a scenario, if you want help troubleshooting. If you just want to talk about the markets in general, I mean, I'm always more than happy to share insights. I'm not a financial advisor. We don't give financial advice, but I'm more than happy to, give personal opinions and have general discussions. I'm always happy to do that. Check out the support pages. Check out the video tutorials. There's more tutorials like this. If you watch the video tutorials, you can see edited versions of my videos. You won't see me bumbling away here on a live stream. So it's a lot more streamlined, the information that you'll get. The block library, again, if you want to see what blocks in there, how they work, explanations of them, have a look through the block library. I tend to keep the block library open on another screen while I'm working on a strategy. I tend to find that helps me a lot. The Talk to Us talks to links to my Calendly page. So yeah, if you're interested, book in a slot, talk to me. And yeah, thank you very much for watching the live stream. Hopefully that's been interesting for you. Happy trading. And I'll see you next time. See you soon.